Okay, welcome everyone. Let's get right into the stock market technical analysis. We're going to use the charts to be our guide. I'm going to go through the broad markets. I also want to look at gold and some of these mining stocks. I think we're at some key levels right now, so I want to point those out, see what I'm seeing. I'm going to show you guys what I'm seeing, and then we'll wrap up. Real quick, guys, I am out on vacation next week. I will not be around. Obviously, Monday's off, so everyone have a great holiday, and then I will be out the rest of the week as well. So, I'll be back the following Monday. So, and then, guys, if you guys are finding value in the content, please drop me a thumbs up. I continue to try to find the trade ideas. I'm not going to be right 100% of the time. It's guaranteed. I can guarantee one thing, and that's that I will not be right all the time. So, because of that, we need to manage risk. We need to keep our position sizes appropriate. Okay, so let's start off with Triple Q's tech sector. Not a whole lot of change. The last 3 days, we've obviously it's really choppy market. It's basically been whipping up and down with a slight lean, obviously, to the downside because, the larger trend has been down. But, pretty indecisive market. You can see here the last 3 days, we basically really wide range, and we've just closed pretty much right about where we've opened. So we're opening kind of like gapping down, trading up, trading down, closing right where we open. And that's what these last 3 days have been. So not a whole lot we can derive from that. There's not big impulsive selling, and there's not really big impulsive buying yet. So I don't have much else. The only thing I've got on this one is we still have the bullish divergence still intact. We still have a bullish falling wedge pattern. So in general, the technicals, the momentum technicals are set up for a bullish trade, but just price hasn't shifted yet. But again, oftentimes, especially in a bear market, we're in a bear market. If you're going to get that shift, it's going to be pretty impulsive and fast and rapid. It's probably going to be a gap up. So it won't show us in it'll just gap up one morning and likely going to be next week if it's going to do anything. Quick look at the FANG stocks. They're all above support. So technically nothing's been broken. You can see here Amazon, we've got support at 101.75. It's above there. Google support right here at 21.35. It's above support. Microsoft support right here at 252.57. It's above support. And Apple support is about 136.95, and we're just slightly above that now. So there's no technical breakdowns on these big FANG stocks, and these are basically triple Qs. They're just not rallying. You can see, this is Apple. The last 3 days, we've just been kind of grinding around. So that's it on triple Qs. Let's take a quick look at XLK. This is another way to look at the tech sector. It's basically the same as triple Qs, weighted a little differently, and I don't think Amazon's in here, but it's got a lot of the other same tech stocks. You can see on XLK, we're at big support. This was resistance level, this level right here, 125. That's resistance all through there. Once we broke above there, support right in here. It was support again right there. Zooming in, we had a little undercut right here, but we've recovered that, and we're basically trading right there at support. So that's above support as well. So again, until that changes, with the bullish divergences, this to me just remains like a long trade, okay? And the thing is, look at the XLK, look at the PPO. As I zoom in, see the bullish divergence right there. So this low that we just made right here was a divergent low. So we've got bullish divergence. We're above support. Nothing's going on right before this holiday weekend. But in general, holding support. So it doesn't look, just doesn't really look that bad to me. It still looks positive. And then also on triple Qs, when I roll back to here, if I look at the longer term, go to the weekly or so. Here's the weekly bull trend that I have in triple Qs going all the way back to 2009. I've modified it, I think, slightly, but basically I still have, 28 or 2019 area where this is where 2018, where the Fed stepped in to pump the market, and then COVID, they did the same. And we're basically right here on the weekly. So I have everything at long-term support. I've got all the FANG stocks at support on the daily chart, and we have bullish divergence. So I have to remain with the long trade for right now. It just is telling me that we're likely going to have a rally. If I see that change, the technical posture of that change, then we'll have to change our tune. But as of right now, it still looks like we're going to have a rally here. I don't know when it'll start, but that's what I got. Okay, let's take a look at gold. This is gold bullion. So interesting candle today. You can see it's kind of a reversal candle that we have right here. That's a doji candle. Basically, they were selling it down and the buyer stepped in and been buying it up. So that's a positive bullish candlestick. And we are at long-term support, or a good support here, because if you look here on the daily chart, this was the correction as far as I'm viewing it. This was the correction in gold. We then had a breakout and we've come in for a back test. We've been trading down here at support for almost, I don't know, a month or two, or, it's been a while, but we're still holding support. So to me, it tells me that, okay, we should hold here and should rally for the next long-term bull rally in gold. Okay, that's what this looks like. Now, it's been months of the same thing, so nothing's really changed over the last couple months, but also it's not bearish. We are continuing to build a bullish case. Today, you can see we made a new low right here, dipping down, and it was clearly a divergent low. So you'll see here the momentum is still bullish, and we are just dipping down, spiking down, making new lows. Looks like stop rating action to me. Looks like the low or the bottom. Doesn't have to be, but it definitely looks like we're at or near the low. And again, this was the downtrend line of that big correction, so big resistance there. We broke out, and we've been back testing that as support. So that's it. That's all I see on that one. But one thing to look at is the dollar as well. So here's the DXY. We're looking at the daily chart here. And the thing I want to point out, the dollar has negative divergence. All right, see the negative divergence? See how the momentum is dropping off, making less and less. Each time you make a new high in price, it's with less momentum. All right, that tells me that we're losing steam, and we're going to reverse on this, or have a high probability of reversing this uptrend. Okay, so there's the uptrend. This is a divergent high. This is a divergent high. And today, slightly, I don't know if they quite got it, but basically we've got negative divergence. A trend line to watch, I think, on this is probably this one right here on the daily chart. You can see, you need to see a break of that trend line, but you break that, that's probably going to be your sell signal in the dollar, and you're likely going to see a continued rally in gold, all right, and the miners. And that's what I think is going to happen relatively soon. Negative divergence in the dollar, bullish divergence in gold. Price hasn't shifted yet, but the momentum is clearly shifting in both of those. And keep an eye on these miners. They look like they have the potential to put in a bullish engulfing candle. You can see here on the GDX mining ETF. As of right now, we slightly have a bullish engulfing candle. If they can keep buying into the close, clearly, setting up that bullish engulfing, that would be a potential reversal candle. One thing to watch for also is this downtrend line on the daily chart on the GDX. And you've got some 2887 to me is a key level, and also this downtrend line. So 2887, as I roll out, you can see that's big. That's been big support. All right, I've kind of got that marked out, and there it is. So if we can somehow recover that, maybe by the end of today, and that would be a bullish engulfing candle, that would be a false breakdown of a key level of support, aka bear trap. So that would basically signal, oh, this breakdown was recovered, and you're likely going to create a short squeeze. And then most likely on Tuesday, we'd probably gap up above this downtrend line somewhere up here and run pretty hard. Okay, that's just speculation there on the potential setup. But again, just things to look for. If you recover that key level, 2887, that's going to be pretty important. All right, that should set you up for a bear trap, or a short squeeze basically. And then also combining that with the bullish engulfing, combine that with the bullish divergence on the miners. See the divergences that are clearly intact. So all this low price action right in here is a divergent low, which means it's a high likelihood that it's going to reverse. And this downtrend is about to reverse. Doesn't mean it's guaranteed, but it's a high likelihood. Basically, if you can continue higher and put in that bullish engulfing, and if we can recover this key level, it's basically the best kind of setup you can ask for. Divergences, reversal candlestick, recovery of a key level, creating a short squeeze. That's about the best you can do, and then it's just manage risk. So in general, I'm still bullish on the miners. They obviously they've been drifting lower, selling off, but got to remain bullish while the technicals tell us to. So still remaining bullish there. Ag commodities continue to drift lower. So again, we're not, we haven't been bullish on these. I'll be looking to probably buy the dip on these. We need to find some key level of support. We've got some really good support right down here at 1940-ish. So I would expect a reaction there. You'll probably get a bounce there, a sizable bounce, maybe something like that, back up to the 200 or something like that. But recognize what's going on here. The commodities have been in a bull trend. They're correcting now. They're going into a correction. That's likely going to ease off the inflation reading because these are the raw inputs that create inflation, this and oil. And oil's already had a decent correction. So this is going to ease off the inflation reading. And once that eases off, the market's going to likely rally on the growth stocks saying, okay, inflation's coming down. The Fed no longer has to hike rates as aggressively. Rally time, and gold should rally. The tech stock should rally because it's all based on the interest rates coming down or the rate of change, the rate that they are hiking rates will decrease. And that goes along with my general thesis the entire time. I always talked about the fact that the Fed wants to walk the market down. They don't want it to crash. And they can't raise interest rates that high. So rather, what was likely going to happen was the interest rates, they'll raise them a little bit, they'll talk really hawkishly, they'll scare the market, try to get it to come down, try to get some of these commodity sectors to break, and then as inflation comes off a little bit, then they can ease back on their interest rate talk, and then the market rallies from there. Now, again, the rally is likely only going to be a bear market rally because we're clearly in a bear market, so nothing more than a bear market rally, but it could still be last weeks to months. It can be impulsive as well. And financial stocks, XLF, at key support as well. So you'll see here rolling out. This was your pre-COVID highs, and it's right there at 31.40 or so. So that should be key support. You can see there's resistance there. We broke, and this is, we're holding that level right now. So we've also undercut it a little bit and recovered it. So in general, we're holding support. It's bullish down here at this level, and I don't see any indication telling me that the market's not going to hold support, at least as of right now. Okay, that's really all I have. So guys, drop me a thumbs up, leave a comment, check out my stock market technical analysis course, and I will see you guys in a week. Take care.